How's it going, guys? My name is Peter McKinnon. Just kidding, this is D-Lits TV, and my name is Dalton. If you guys have not been here before, what I do on this channel is I talk about all things investing with my tips, tricks, and insight into the stock market. I share with you my investing process so you can learn and hopefully gather more knowledge around your own investments so you can make more educated decisions. Now, on this channel here, I focus on what is known as the Robinhood Challenge, where I invest $100 every single week into the stock market, and I share all of my moves when I'm selling, when I'm buying. So this video is going to give you more insight into what I'm doing, how I'm structuring my portfolio, because I have made some changes. So let's jump right in. Let's get right into the Robinhood app and get down to business. So there's been some really exciting stuff going on in the stock market recently with so much news coming out and a lot of volatility again, which is actually, one of the things that I try and steer away is volatility. I look for solid dividend investments, as many of you know if you guys have been to this channel before, but let's just look at some of the gains that I'm seeing so far. So over the past day, we're looking at a $17 return. Past week, we made $265.66. Past month, $352.41. 3 months, $702. And 1 year, obviously, we are up $334. Huge bounce. And it looks nice coming off of this whole pandemic situation where the entire market seemed to tank. We are sitting really nice at this point. Very satisfied with the results that I'm seeing from this challenge here and looking forward to continuing this going forward. One of the main things I wanted to talk about in this video here today was my strategy. So in previous videos, a long time ago, I always talked about structuring my portfolio with really solid blue chip stocks to begin with. And that's exactly what I've done up until this point. We're looking at a $7,300 portfolio. And what I'm looking to do from here is to make a strong push to get this portfolio value up to $10,000. And that way I'm going to start straying away from some of these dividend stocks and look at some growth stocks, because I do feel like we are missing out on another huge opportunity with some growth stocks, especially now where there's a lot of money to still be made in this market. If you guys are investing in this market and you're not making money, this is one of the better markets I think that you can have if you are a risk taker, riskier investor, because of the volatility going on. So let's just scroll down into my portfolio. My top holding, I'm going to sort it. I'm going to go total equity right now. Actually, I'll do total return for each stock so you guys can see. So SPHD, still my number one holding. It's going to be for a long time here. I have 47 shares, and if you click into it, really solid performance, and we're starting to hone in on going positive again in this ETF. So I've invested multiple times. Basically, this is a high dividend, low volatility ETF, exactly what I've been talking about, exactly what I like to focus on. And honestly, in my mind, this is the best dividend ETF that's going to be safe for people to invest in, so that's why I really like it myself. Just one thing to note, never just copy anybody on the internet, never just invest in something because I'm investing in it. Definitely do your own research so you understand what's a solid investment. If I jump into my next stock here, Realty Income, same thing, we're approaching going positive, down 8.49%. When I'm looking at stocks and I'm down about 10%, that's when I look to double down. So any of these really are solid options right now. Realty Income, monthly dividend payer, very solid. It is a real estate investment trust, and they have a portfolio really that did suffer some hits back in April where they were at around 82% of the rents actually being paid. But I think that as time goes on, as we're going to start going back to the workforce and everything is going to change, this is a great opportunity at a great price for me because, I had been investing in them when they were at much higher prices. So continuing to invest in them, looking to dollar cost average down. CocaCola, someone asked me in the comment section why I actually chose Coca-Cola over Pepsi, because Pepsi offers a lot of great things. And basically I went back and said, Pepsi does offer a lot of diversification, more so than Coca-Cola, believe it or not. They have such a wide product breadth and line, but I think Coca-Cola isn't lacking too far behind. Warren Buffett uses Coca-Cola as one of his most invested in stocks. He absolutely loves it. And Warren Buffett, obviously an investing prodigy, a prophet, and really a smart businessman. So one of the main reasons why I started investing in Coca-Cola was because of Warren Buffett. But on top of that, just doing some research into it, I think, they're trying to break into the seltzer market, the spiked seltzers. There's a lot of things that Coca-Cola can introduce, and it's going to be interesting moving forward. I think they're going to close in on Pepsi, and because I'm a long-term investor, I see more long-term potential out of Coca-Cola. Microsoft is another great stock that I'm invested in. The reason why they're going up so much right now with all this craziness is there is talk of them acquiring TikTok. A lot of great stuff there. I feel like there's so much I could say about each one of these stocks, so I'm just going to try and whip through so you guys can see. Johnson & Johnson, another great healthcare basically they're just so diversified that this, in my mind, is a no-brainer to invest in. Apple picked them up right before they announced their, stock split. So doing really well on Apple right now. If I click into them, literally the week that they announced, I had bought before they had announced their stock split. As I said, up nearly 20%, closing in on that today. AOS is one that I've been invested in for a while, finally positive on that. BTI, Total Stock Market Index. I always think it's important to have one of these in your portfolio, especially if you're a hands-off investor. AT&T, one that has been my favorite for a long time because they offer such a great dividend payment. HPQ is interesting. I still think that they're going to get bought out by another company. I think it's a matter of time before that happens. So for now, we're just holding steady on that investment. McDonald's, really, really great fast food. I think people are starting to go out more and more. I think, if you saw my video last week that I announced that I was starting to invest in Starbucks, McDonald's is another great option because I feel like, consumers are going to start going out, buying fast food, buying coffees, really, really great stuff there. Pfizer, another pharmaceutical that is going to be, they do some really, really awesome stuff as well. We've got Amazon, and Amazon is very, very solid. I think that pretty much anybody could have this in their portfolio. Obviously more growth here as they don't offer a dividend payment. DGROW is a straight up dividend growth investment, ETF there as well. So obviously it just is in tune with my investment style. We got Citigroup, one of the few financial companies that I am investing in right now. We have Cisco and AbbVie as well. And then looking into Walmart, save money, live better. What better time to invest in a company like Walmart where people are going to be looking to save more money and better their lives, especially with everything going on. Now we have American Express and Charles Schwab. Charles Schwab, one that I'm really, really glad that I got into, obviously with the whole war between all the different brokerages offering free trade and then trying to make it easier for consumers to invest for, it's really, really great for you, for me, investors, all the competition within the investment realm. Archer Daniels Midland Company, a very solid option as well. Then we have Starbucks, as I mentioned before, with the consumer spending. I think we're going to see that this is going to go up. Noble is an ETF that basically tracks the Dividend Aristocrats. So one that I've wanted to, put more money into, and one that I kind of have let fall off my radar. But I think that in the future here, in the near future, I'll start pumping more money into this. For a while, I was down if you're looking at them. Pretty much, it just mirrors the market, what's been going on, but it's really, really solid. If you guys want to look at some of the investments in this particular ETF, I would highly recommend looking into it. It might align with your strategy. Dividend Aristocrats are companies that have been increasing their dividend payments for 25 consecutive years. And this particular ETF, I believe, is evaluated every year. So stocks are removed, stocks are added, and it's just really, really great. And I believe there is a relatively low expense ratio here too. So another thing I want to do, show you guys the total equity I have in each one of these. So if I go to my equity, you can see just how much money I've put into each one of these stocks or ETFs. So it's really interesting because there is still a lot. I would like to say that there's a lot of diversification within this portfolio here, but I think, it's going to be heavily weighted towards technology once I start investing in some of those riskier companies, some of those growth companies that I really want to be investing in. I could see myself going into Tesla. I can see myself in many, many different directions here. But another thing I'll do for you guys here, just so you have insight, is look at the last price so you understand how expensive some of these stocks that I'm investing in are, just so you can get a awareness. Apple is at like $450 right now, and I'm also investing in some cheaper ones. HPQ is only $18. They were like $25. There's a lot of growth potential there as well. There's just some really solid options that I think that people should consider looking into, doing some research and making your own decisions about purchasing these stocks. So anyways, guys, that's what I have for you in this video here today. I'm so glad that you came by. I'm so glad you checked it out. If you have any questions about my investments or questions that you have about your investments that you want to just run by me, definitely let me know. Leave a comment in the comment section down below. I'll be sure to get back to you. Thank you so much for checking out this video, guys, and I hope you have a great day.